Hello, my name's Ron Cohen, and welcome from beautiful downtown Fremont, California. I'm a tax partner with the firm of Greenstein, Rogoff, Olson & Company, and we do a little weekly tax update. So there's a number of things going on this week that I wanted to mention, and a few complaints along the way. First of all, we're going through getting all the 1099s and W-2s all taken care of. They were supposed to be mailed out to the recipients of the payments by the end of January. However, the official copies have to be mailed into the IRS by the end of February. They leave that little time frame so that if you mail it out to someone and they complain that the amount you used is wrong, you have a chance to fix it before sending it to the IRS. But the end of February is coming up, so all those 1099s and W-2s have to be finalized. At the same time, all the brokerage firms are trying to get their 1099-Bs finalized, reporting interest, dividends, capital gains, and so forth, so that people who have those types of investments can get the data, start doing their tax returns. Well, a lot of our clients are incorporated or established in the state of Delaware. We're in California, but a number of entities are incorporated in Delaware, but domicile in California. So they're California taxpayers, they have to pay California tax, but they're established under the laws of the state of Delaware. That's perfectly fine and legal and appropriate. And we like to remind our clients that on March 1st, the corporate clients have to file with the Secretary of State of Delaware, usually paying a fee of several $100s. If it's a big public company, it can be more, several $1,000s, for the right to use Delaware as their state of incorporation. You file the return, you update who the officers are, where information gets reported if the company gets sued. Delaware requires all that information in their records, and that annual report's due March 1st. If your company is a limited liability company, a partnership, a general partnership, those reports are due on June 1st. And that is a very simple filing. They both are. You can go online with Delaware, go to the Delaware Secretary of State. They will guide you right to the place to file. Take out your credit card, debit card, put in the information. You need your file number, but even if you don't have your Delaware file number, you can look up your Delaware file number with the company name, but do get those things filed. Again, LLCs are due June 1st. If you don't, they can charge a penalty of several $100s or more, so we like to encourage clients to get those done. Okay, all right, well, I think I'll start with a little success story. We talked about last week how if you are a U.S. person, corporation, trust, partnership that owns an interest in a foreign corporation, you may have to file Form 5471. It's a horrendous form. It can be 8 or 9 pages with a bunch of additional schedules, many reconciliations, income statements, balance sheets, and often, most of the time, that form triggers no tax at all. But if you fail to file it and you're a corporation, the IRS service centers will automatically assess a $10,000 penalty. Well, that happened to one of our clients. Circumstances beyond his control, and certainly wasn't our doing. He ended up filing the return late with a 5471, and he was assessed about a couple of months later a $10,000 penalty form. So we wrote a letter to try to get the penalty waived, and we made many arguments, and they were successful. Now the IRS refunded, this taxpayer had paid in the penalty because he didn't want any credit problems of $10,000, and he had gotten now a refund of that penalty plus some interest from the IRS because we convinced them the penalty shouldn't apply. They never told us, they being the IRS, which argument we made was the one that they agreed with to waive the penalty. But I picked this up from a tax attorney down in Southern California that with regard to penalties on foreign bank account reports, that's the Form 90-22.1, the FIBAR, Foreign Bank Account Report, 5471s, 5472s, Forms 3520 and 3520A, all these foreign reporting forms these $10,000 penalties are an excessive fine. The Eighth Amendment to the Constitution that we all learned in high school as part of the Bill of Rights says excessive bail shall not be required, nor excessive fines imposed, nor, the part we all remember, nor cruel or unusual punishment inflicted. It's right there in the Constitution. Well, these $10,000 penalties for simply not filing a form, especially if you owe no tax, are an excessive fine. So somewhere in our letter, that was one of our arguments. They decided we were right and sent back the client their $10,000 penalty, and we're a little bit proud of that. Okay, well, the IRS is a new commissioner. The old commissioner, Doug Schulman, went out in a little bit of a controversy, well, not a little bit, a large controversy, and a little bit of shame with regard to the qualification for tax-exempt entities who might have had a political spin to their activities. You can find all about that in the internet. So Doug Schulman was out. A gentleman named John Koskinen is the IRS commissioner. And here I just want to rant for a few minutes. Look at his background. Look at his Wikipedia. He is a lawyer, summa cum laude, whatever, Duke University, Cambridge. His undergraduate degrees in physics. He has a law degree. He worked for the Soccer Foundation. He was deputy mayor of Washington, D.C. for a time. He led Freddie Mac, the big mortgage company, after it had its crisis in 2008. He came in to save the day. But when I looked through his resume, he is not a tax guy. He never practiced tax. And this is a common ongoing issue in Washington where they make the assumption that really bright people can do just about anything. Well, you know, a nuclear physicist is a really bright person, but I wouldn't want him to do brain surgery on me, right? But here we have a person who, other than perhaps his own personal tax return, has no background in taxation. It takes 3 to 5 years to even get halfway competent in taxation, yet he's leading the Internal Revenue Service as its main administrator. I wish they would take tax attorneys or CPAs to lead the IRS who've spent their life successfully working in the tax law instead of people who appear to be political functionaries of the right party. All right, well, he wrote he was interviewed and talks a great deal about what's the IRS doing. First of all, he's apologizing, which is not his fault, that it's going to take longer if you have to call the IRS and be on the phone. We already, at times, have to call the IRS and sit on hold for over an hour, so I can't imagine what's going to happen if it gets worse. Second, he mentions the issue about the fact that over the years, the IRS is having the tax preparers do a great deal of the auditor's work. Now, how do they do that? They ask more questions. They make us fill out more forms. So instead of just reporting income, following the law, and getting the right answer, they actually make us ask and ask and ask more and more questions to audit the taxpayer. I'd just like to point out a few things that I would hope the commissioner could take a look at the Form 990, which, as you'll see when we scan it, has 4 or 5 pages of questions. Yes, no questions. Every question leads to more questions, which leads to a supporting schedule. The Form 1120 has several pages of questions that lead to other questions. The Form 1065 has questions. And then there's the winner of them all, the uncertain tax position form, which came in a few years ago, which says even if you think you may be taking a position that's a little bit gray, legal, but a little bit gray, you have to fill out this form and lead us to it. And then there's this interesting conundrum. They promise they won't use this form to audit those issues, but you need to disclose it to them so that they know they're there, which almost strikes to me as a lie. Why would you have people fill out Form UTP if you're a corporation with over $50 million of assets, telling you issue by issue what are the things that you have some worries about? They're legal, but some worries about if you weren't going to read it and use it. It's just interesting. So yes, the IRS continues to make us audit our clients harder and harder, and of course the IRS isn't paying us to do that. We just have to explain to our clients that the environment continues to get more difficult. Okay, off to Switzerland. Well, over the years since 2008, with the UBS debacle, where UBS was intentionally, and they paid $800 million to the IRS as a fine, because UBS was intentionally selling their clients on putting money in secret Swiss bank accounts directly to avoid U.S. taxes. So in 2009, the IRS came out with a program where if you had hidden money in a Swiss bank account and not paid your taxes on the income, it could be a bank account, investment account, any kind of financial vehicle, you could come in under a voluntary disclosure program and try to get it all right. In addition to paying tax, you'd have to pay very substantial penalties for going through this voluntary program, but you might want to do it because if you didn't go through the voluntary program and they caught you later, they were saying they would prosecute and send you to jail. So a lot of people went through this voluntary disclosure program. Other people chose not to. And in fact, in the Wall Street Journal today, I have to point out that what a lot of people did was change their Swiss bank accounts into Swiss insurance policies. And so now the IRS is going after that. One comment I want to make, that's in a Wall Street Journal article. There's not anything particular new about that, but here's what is interesting. When the IRS pursued Swiss banks, even without a law being passed, all the Swiss banks, I'm told, have now do not allow U.S. taxpayers as their clients. If you were a bank account holder with a Swiss bank in 2010 and 11, they were contacting those people, sending them a check, and closing their accounts. It's so bad now that NPR reported a few days ago that in Germany, a gentleman who's an American citizen but has lived in Germany for 40 years got contacted by his German bank, not his Swiss bank, but his German bank. And the German bank said, we're closing your account and sending you a check. And the question was, well, why? I've been a customer for decades. And the answer was, you're an American. The American government, Justice Department, IRS, is giving everyone around the world too much heat. The gentleman couldn't find another German bank to accept him as a client. So it's like if you were a customer of Bank of America and you were kicked out and you couldn't go to Wells Fargo or Chase or Citibank, nobody would take you because you're an American citizen. That's what people are facing, and that's why the number of people who are giving up their U.S. citizenship is increasing dramatically as people try to get their life back in order due to these additional compliance burdens and oversight from the Department of Justice and IRS for people living overseas. Okay, well, I think that just about covers it for this week. We'll be back again next week. Again, my name's Ron Cohen. I'm a tax partner at Greenstein, Rogoff, Olson & Company. We do tax work from all kinds of clients, to small, private situations to multinational corporations. And I myself specialize a bit in international work. So please give us a call if you need our help or just have a question. Again, I'm Ron Cohen. This is Greenstein, Rogoff, Olson & Company, and we'll see you next week.